That's exactly right. I mean, as rates go up, and they're going to continue to, right? The Fed's talked about 50 basis points, probably more in May, and then June and July. And so as that happens, it is a bit of a headwind. But what I can tell you, historically, if you look back over the last 6 rate hike cycles, going back to 1986, small caps have actually averaged about 17% from the first hike. So we think it is an opportunity to take advantage of, let's call it beaten up sectors like technology, or even look at the Vanguard growth, even on a large cap standpoint, down about 14% year to date, with Vanguard value, up about 2%. So that's 16% delta. I just think it's time to play a little offense. And it's a stock picker's market. I mean, stocks follow earnings, and we're going to find those companies that can do well. Look at Netflix today. It's kind of bringing down the market, but it's a stock picker's market. You got to be on the right companies.
It is weird because you think if value's outperforming, if the financials are supposed to do well, both of those things would typically favor small caps, right?
Yeah, that's right. So financials being more domestically oriented, and also they're going to do well as they can have more net interest margin and things like that. So they should do well in rising rates. And just look at the breakdown of the Russell 2000 versus the S&P 500. The S&P is about 28% in technology, whereas the Russell's only about 14%. So if rates going up are bad for technology stocks, that should hurt the large cap index disproportionately to small cap.
And even for people who, like you said, don't want to make a big call right now, but are acknowledging the stock picking environment right now. Correct me if I'm wrong. You're looking at is Freeport considered a small cap? Freeport McMoran on Semi, which again I think of as a much bigger company, and Palomar Holdings.
Yeah, Palomar is definitely the smallest one of that group, and again I think they're going to earn something like $3 in 2022 and $4 in 2023. So you have a company that's going to be growing at 30%. This is an insurance company, that's going to be growing at 30%, trading at 15 times earnings. So I think that's a real value. The CEO Mac Armstrong's been doing a great job, and I just think again eventually the stock price will follow those earnings. And on Semi's a little bit bigger, and it's really hitting on every cylinder. Hassan Al-Khoury was with another company we owned before, Cypress Semiconductor, and he was supposed to get margins to 45% in 3 years. He's already got them above that, right now. So that stock is also cheap, and industrial automation and electric vehicles and 5G build out. I think that one's going to work well. And then Freeport's the last one that is a much larger cap company, but really should work well as a hedge against inflation, and also electric vehicles using about 4 times as much copper as combustion engine cars. I think Freeport works out well for investors also.
Well, I can't wait to see what happens with the small versus large, but certainly the sectors that you've picked have been working no matter what size. Semis will be the asterisk there, but copper, insurance names we know in the Dow, those have been strong as well. Sandy, it's great to have you here. Thanks so much today.
Thanks, Kelly. Take care.
Sandy Villere with the Villere Balanced Fund.